Bristol-Myers Squibb, the maker of popular blood thinners like Plavix, reported third-quarter earnings that beat the street, but revenue came in just a bit softer. For this week's Stock Therapy segment, we dig deeper into the company's results with Bloomberg reporter Shannon Pettypiece back with us from holiday. So good to see you back all nice and tan.
Yeah.
Okay, so Bristol, I mean, this is really, as we were talking about, really just a sign, this report, a sign of just cost cutting by the company, right?
Right, yeah. You know, revenue's about flat, a little bit below expectations, but we're continuing to see profits up, and that's because the company has just been slashing costs over the past several years. They've cut about 35% of their workforce through divestitures and layoffs since 2007, and that's all part of a plan to save $2.5 billion in costs by 2012. And the company needs to do that because 2012 is when they lose their top seller, the Plavix blood thinner. It goes off patent, and you're going to have generics come on, which is going to really erode sales. So now it's all about a race to cut costs and add new products before they face that big patent expiration.
And, you know, we've talked about patent expirations hitting a lot of other drug makers. I mean, is Bristol in any more of a severe situation than, let's say, a Pfizer?
Yeah, they're in one of the most of the drug makers, they're in one of the most severe situations because this product, Plavix, does account for such a large chunk of their revenue. It's the second best-selling drug in the world, so it is a big product.
How much of their revenue is it?
It's a very significant part. It's about 25%, and the company, they you know, have been trying to adjust, making small acquisitions here and there over the past few years to adjust for this. And they've also had some good news coming out of their pipeline. They've got treatment for skin cancer that's coming up, and another drug to prevent strokes that they're hoping to get to the market in the next few years, help start generating some sales to replace what they're going to be losing from Plavix.
What looks most, you know, from the analysts and the investors who are talking to you and also the company, but what looks most promising for Bristol?
As far as their pipeline goes,
yes.
Yeah, this melanoma treatment has gotten some really, really promising results. That's created a lot of excitement, and it's one of these treatments that could really revolutionize a very deadly disease right now that offers very little hope for patients. So if this is successful, there was some data that came out earlier this summer that looked promising. There's expected to be some more coming out over the next year or so, and if they can get that to market, that could have big sales potentials.
I mean, that's really the answer for these, you know, for these companies, is that they've got to have another big blockbuster
and continuing,
drug.
And continuing to make acquisitions. And it's been talked about for years and years and it hasn't happened, but Bristol's always been talked about as a takeover target too. So that's always an option as well, that another big maker could come in and scoop them up.
And buy them. Okay. Talking about acquisitions, we had this story out yesterday about Sam Waksal, who some may remember the infamy. He was the ImClone CEO, or former CEO, who got jailed, and he served his term, of course, for insider trading, and now he's come out with this new company, Cadman, and he's potentially going to buy Three Rivers Pharmaceuticals. Is that right?
Yeah, yep, that's the report. And Waksal's sort of been emerging on the biotech scene over the past year or so, I'd say. You know, there were reports that he was at J.P. Morgan last January, this big investor conference for healthcare investors. You know, there started being reports that he was raising money out there in the private capital world. So he's slowly sort of been reemerging on the scene since he got out of jail in early 2009. And now he has this new company. But
how are people reacting to him, though? I mean, he's got this checkered past.
Right, exactly. Well, Waksal has a very classic science background. Before ImClone, he was a PhD. He studies immunotherapy. He held academic positions at Mount Sinai and Tufts and Stanford. So in a way, it's sort of a natural move that, you know, he's back out. He built ImClone into a company that was bought for $6 billion, $6.5 billion, and now he's kind of trying to do it again. So in a way, a natural progression for him, except for that jail part in the middle.
That one little part there.
So we'll see how it goes. But, you know, there is one limitation on him. He can't be the head of a publicly traded company as part of his deal with the SEC. So he's going to sort of be in this private world for a while, or maybe a behind-the-scenes player.
Right, sort of an investor then for now.